So today we're going to be using Heikin Ashi RSI oscillator. So go inside indicators, type in Hashi and close off this screen. So you will have this nice indicator over here showing you overbought, oversold areas and nice Heikin Ashi candlesticks. So in this case, what we want to do to buy this trade. It looks like it could be a nice buying opportunity just off here, right? A nice bullish engulfing candlestick is developing and it's trading nearly at the bottom, right? So that could be a nice trading opportunity. Now, if we would enter this trade just over here, just from the bullish engulfing candlestick, that could be a nice trade, but we need further confirmation from the Heikin Ashi RSI oscillator. So what do we actually need? Well, let's play the tool and find out. So once we get this change from red Heikin Ashi candlesticks to green, that's already a confirmation towards the upside. In addition, we are also seeing the RSI indicator over here. The oscillator is actually oversold, which shows that likely bullish pressure will come in, and we know that we are trading near this area zone, which is the previous bottom, which usually acts as a form of support as well. So that could be a nice trade towards the upside if we would have entered this trade just off this candlestick over here. Let's see what happens. The market seems to be heading towards the upside, pulls back a little bit but shoots towards the upside nicely. Once we reach our first take profit level, we would move stop loss to entry for risk-free trading. So let's see what happens, whether we are getting stopped out or not. So it pulls back a little bit, seems to be pulling back and actually reaches our entry position. That is totally fine. We would have closed a portion of our trade over here, and once we move our stop loss to entry, we don't lose anything else. So another example of how to use this gray indicator, as you can see, the market direction is very important, right? The current market direction is towards the upside. We are seeing a range over here as well, a nice area of resistance and support, but usually after a push, exhaustion, consolidation, it's another pushing scenario. Now we need to find the push, right? We are currently on a consolidation. So if we just zoom in, what do we see? We see this bullish engulfing candlestick just off this area zone, right? We have this nice area of support just over here. We see this wick showing bull pressure, bullish engulfing candlestick. However, we are not seeing any green candlesticks over here. This is not a great entry position at the moment. However, the RSI line over here is pretty much near the oversold area, so this could be a nice trade developing. So let's see what actually happens. A nice push above this previous area level. This is good. However, we do have an area of resistance that cannot be ignored, right? So if we just mark it over here, ideally we want to be breaking this area zone, because every time the market touched, it went towards the downside. So although we do have a trade over here, this nice bullish engulfing candlestick, the Heikin Ashi is telling me it's a nice area to buy. We really need to wait for a nice push exhaustion push scenario. So let's see what actually happens with the trade. So it nicely pushes towards the upside, has a pullback right to the previous area zone, resistance becomes support. Likely we will see some bullish pressure. So let's see what happens. Bull pressure comes in. This is where we could ideally enter a trade. Maybe you could have entered on the lower time frame, such as the 1 minute. So let's take a look. 1 minute time frame. Look at this, a nice bullish engulfing candlestick. Push, exhaustion, completion of exhaustion would have been seen on the 1 minute time frame. This is our entry candlestick position to long this trade, and we could probably do a nice 10-10 1-to-1 risk to reward ratio from the previous area low. You could potentially even have stop loss somewhere around here just off the previous area zone. That could be probably even better actually, but let's see what happens. Pull back, going towards the upside nicely. There we go, and it continues shooting towards the upside, right? So the real question is, where do you actually close off the position? Well, you don't want to be using the Heikin Ashi RSI oscillator at this point. You already entered. You don't care whether it's overbought, oversold, because the market can trend for a while, right? You found your trade, you found your entry, you use the indicator for confirmation. What you want is to use the 9 moving average. So using the 9 moving average, what happens? You need to wait for the candlesticks to actually close below the moving average, right? Then you can close off the trade. So let's see what happens. It carries on bouncing. We carry on making money. So imagine this. You could have probably closed off the trade somewhere over here, because the Ashi RSI oscillator would have been telling you it's overbought, right? But that's why you use the moving averages to finally maximize your pip gain. Look at this, a nice pushing candlestick, once again bullish engulfing candlestick. That's a great move towards the upside. Look at this, it carries on moving up, and we get a closure over here. Bearish engulfing candlestick, area of resistance over here, crossing the 9 moving average, telling me that the momentum of the trend is slowing down. So this is where you would have closed your position, and you would have trailed your stop loss to entry every single time. Take profit over here, that could have been great, or just over here after the cross mentioned. So that could have been a great trade that could have made you a lot of money. So as I said, use this indicator only when entering, not when you want to close off the trade. You can use different indicators that are much better. In some cases, you can use the 9 moving average as the entry indicator instead of a bullish and bearish engulfing candlestick. Taking a look at this trading opportunity, EURUSD 5-minute time frame shooting towards the downside nicely. The overall direction is down. That's what we want to be trading. We are currently waiting for the market to change its direction from green to red. Very likely that could be a nice trading opportunity. We also would be waiting for the 9 moving average cross just over here. These previous area levels of resistance could also be respected, so we need to look out for them. Just mark them just over here, and let's see what actually happens. So the market actually pulls a nice trigger towards the downside just over here, crosses the 9 moving average already. Looking at this, a nice bearish engulfing candlestick over here as well. RSI has been overbought, very likely shooting towards the downside. Another indicator for the euro would have been the retail sales on Wednesday, June 1st. They came out negative, very likely euro is falling down. So that could have been a great short position just off this area zone. Stop loss has to be just above the previous high, so just over here should be sufficient enough. 1-to-1 risk to reward ratio, the same technique once again. So let's see what happens. It drops down nicely. So after the speech, there was a speech just over here dropping down nicely. Look at this trade, and you could have trailed your stop loss once again. Look at this. So from 7.5 pips, you could have potentially made around, look at this, 74 pips at least, because you would never close off your trade because the 9 moving average has never been broken, right? So look at this, breaks over here. There we go, a nice trade. Look at this, 51 pips, around 52 53 pips. Take profit low if you use this trading method to stop your trade out, or you could have potentially maximized your pip gain just over here and closed off your position manually as well. Another indication would have been the oversold scenario over here. However, as I said, I wouldn't be using it too much because look at this, the market is oversold from this area level over here, from this candlestick. So that's not a great closing position, right? That's why you want to be moving with the moving average over here to maximize your pip gain rather than closing your positions over here for pretty much 2-to-1 to 1-to-1 risk to reward, right? You can scalp trades and trail your stop loss to maximize your pip gain. And if you catch a few of them a week, you're going to be a profitable trader, I can guarantee it. So I actually backtested this method, 150 trades in total, 70% win rate. Consecutive wins 14, consecutive losses 9. So yeah, from 1,000 initial deposit, you could have potentially gained $1,808 trading with this trading strategy. So that seems pretty good. Likely you could make this even better, so subscribe to see more indicator back testing, and let's find something that's really good.